Good afternoon and good morning to those of you in the West. Welcome to today's Simpson Consulting webinar, reporting under Internal Revenue Code sections 6055 and 6056, what employers need to know. To get going, let's introduce today's presenters. First, we have Christopher Calvert, who's a Senior Vice President and the Health Practice Leader for Simpson Consulting, and Joanne Usted, Vice President and National Health Compliance Deputy Practice Leader for the Siegel Group, which is the entire organization. And we're going to start today with Chris.
Great, thank you, and good morning or afternoon to everyone. We're excited to have a large attendance today and to spend some time on the latest in ACA reporting. I am going to do what any good practice leader should do, is I am going to introduce and try and get out of the way, because Joanne has been intimately involved and is very knowledgeable about all the details of this latest employer reporting requirement. So our plan is to spend about 45 minutes on the initial presentation and then try and cover as many of your questions as we can. Please do ask them, as was mentioned, through the Q&A tab, and we'll try and insert and cover them as we go where it makes sense. You know, I did, by way of background, assure Joanne that we would not kill the messenger as a group. ACA reporting has become quite onerous for many employers we know, so we're going to try and spend time today both clarifying what your obligations are and leave you with some ideas about how to meet those obligations. You know, and again, we will leave plenty of time for questions at the end. Thank you again for joining us. Let me turn it over to Joanne and we'll start the presentation.
Thank you very much, Chris. This reporting is required so that the IRS can enforce three different and new tax code provisions that were created by the Affordable Care Act. And this helps to explain why the reporting is so complicated. First is the employer shared responsibility penalty. This is marked in bold and red on this slide because it's really the most important from a large employer's perspective. And so we're going to spend some time talking about that penalty in just a minute. The second is the individual shared responsibility penalty. This is the requirement that individuals have coverage in place or pay a tax penalty. Because of the individual mandate, the reporting forms capture actual enrollment in group coverage. And third, the premium assistance tax credit. These are the federal subsidies that people can get when they purchase coverage in a public exchange or marketplace. And this is relevant to employer reporting because individuals who are eligible for affordable minimum value coverage through an employer-sponsored plan do not qualify for these tax credits. This slide basically shows the framework for our discussion today. Before you can tackle ACA reporting, you need to understand the employer penalty rules. The concepts that are defined in the employer penalty rules dictate whether and how you complete the reporting forms. For example, who is a full-time employee, or who must the employer treat as a full-time employee? Is there some reason why not offering coverage to a full-time employee in a particular month will not trigger the employer penalty? So first, understand these rules and concepts, then implement your employer penalty strategy, your strategy for avoiding or minimizing the penalty, and then you are ready to tackle ACA reporting. Let's begin with a refresher on the employer penalty. This took effect this year. It applies to large employers, and that means employers with 50 or more full-time employees, including full-time equivalents.